Hey, what's going on? My name is Nick. I'm the owner of Valor Mortgage. I'm an independent mortgage broker here in the Gilbert, Arizona area. And the question that we're talking about, or the issue that we're talking about today is, should you pay points or discount points for a lower interest rate? And is it normal for a mortgage company to disclose rates automatically with discount points? And unfortunately, I don't think a lot of people are talking about this, and really consumers don't really know about this. And that's really what's happening in this market. And to me, what I see on a daily basis when people come to me is just it is becoming a real issue because it's costing people a lot of extra money when closing. So first, let's understand, mortgage interest rates. Each mortgage interest rate has a cost or a credit. It's either going to cost you additional money at closing, or it's going to generate lender credit that the lender is going to give you credit towards your closing costs. And so if you are looking at your loan estimate, and if you don't have one or haven't seen one, that's fine. But if you're looking at what's called a loan estimate, what is always sent to you by your lender, on page 2 on section A is going to be the origination cost. Typically, and what's normal is that you'll see an underwriting fee, a processing fee, and sometimes you'll see an administrative or admin fee. Those are somewhat normal depending on who you work with, right? Now, here's where the additional fees for interest rates come in, and it will show up as what's called an origination cost. It's going to be a percentage. It'll show up as a percentage, and it's a percentage of the loan amount. So whatever that percentage is on the origination cost, multiply it towards your loan amount, and that's going to be the dollar amount that you're going to owe as far as additional cost. Now, they make it easy for you because it does calculate it into a dollar amount. So you'll read a percentage, origination cost, and then a dollar amount. And so it'll tell you exactly how much that interest rate is costing you. On the flip side, as far as credits, if you go down towards the bottom of page 2, in section J, you'll just see lender credits, and it's always going to be shown as a negative dollar amount. And so if you have an interest rate that is generating what's called lender credit, you won't see anything in section A, but if you look in section J, you'll just see lender credit negative dollar amount. And so whatever that dollar amount is going to show up to that. And so that's how you can figure out easily how if your interest rate or the interest rate that your lender is providing to you has a cost or a credit. Now, let's get into what is becoming somewhat normal, unfortunately. So obviously we're in a very challenging market. Everybody in the mortgage and real estate industry, we are very slow. The last 2 years, even with COVID, we've had a productive purchase volume, and we've also had a lot of refinances. And about the second quarter of this year of 2022, again, the refinance business completely went away. There's some refinance business out there, but the refinance business completely went away. And everybody knows that demand has fallen to a 20 or 30-year low, and there's houses just sitting on the market, and buyers just don't want to buy. And so what we're seeing is that mortgage companies are struggling, especially the big corporate or retail companies. And and it's unfortunate, they're trying to make up that difference. And on top of that, interest rates are much higher. And the rejection that I am seeing from a lot of clients that are wanting to purchase a house is going to be the payment. They didn't realize that a $400,000 or $500,000 house, depending on the loan program, it could cost them about $4,000 a month as far as a mortgage payment. And that's just really hard for them, hard pill for them to swallow, based on their current income. And so what we're seeing, is the rejection of the payment. It's not necessarily the interest rates. Obviously, they're not happy with it. Home prices, I think, are still a little bit up and they're coming down, but it's the payment that a lot of buyers are, rejecting, or that's the rejection from the buyer standpoint, is the payment. And so what we're seeing from these big mortgage companies or corporate or retail companies is, instead of giving a much higher interest rate, they're giving a little bit lower interest rate, let's just say about 7% or 6.875. They're, saying, hey, yeah, we can get your mortgage done and here's your interest rate, right? Well, they're giving that 7% or 6.875 and they're charging points. I've seen several loan estimates from these big mortgage companies, and they're giving those rates, and now that rate could cost an additional $8,000. And they're hoping that the client or the person purchasing a house just doesn't notice it, doesn't say anything about it, or thinks it's normal, because that's what they're saying. Hey, everybody's paying points right now. It is what it is, right? And I'm here to tell you, it's not normal. Like, first and foremost, if you don't ask for a lower interest rate or say, hey, how much, I want to pay points for a lower interest rate. If you don't ask that specifically, no mortgage company or mortgage banker or anybody that originates loans should give you an interest rate with cost. What they're trying to do is they're basically trying to, I wouldn't say get one over on you in a sense, but they're trying to slip it by, right? They're trying to give you that little bit lower interest rate that's competitive and charge you points, because that's what their company's, margins are, but they're charging you additional points, and they're just hoping that you don't catch it or say anything. And unfortunately, that's happening a lot. And so if you are getting pre-qualified and you're asking your mortgage banker or a loan originator, hey, does this rate have discount points, right? And if they're sending you a loan estimate without you even asking that shows origination costs in Section A, that is your first red flag. And you need to take your business, or at the very least, go out and talk to another mortgage company or loan officer and see where they're at. Now, I do encourage you, obviously I'm biased, to go talk with a mortgage broker. Reason being is that, most mortgage brokers, we're small, independent. They are going to vary on size, so their interest rates are going to be a little bit different depending on the size of the company. But 10 out of 10 times, if you go talk to a mortgage broker, their interest rates are going to be much lower. And so that interest rate that mortgage banker is giving you, that 7%, that 6.875, if you go to a mortgage broker, more than likely that interest rate is not going to cost you any additional money at all. Whereas the big corporate company or retail is charging you, let's just say $8,000 for that interest rate. And so again, if you see that in Section A of your loan estimate, that is your first red flag, and you need to start shopping or take your business elsewhere, right? And especially if you go talk with a mortgage broker, you're going to see a big difference in that. And so, again, to go back and answer that question again, is it normal for a mortgage company to charge you discount points for an interest rate right off the bat? No, it is not. It is not normal for a company to do that. And if your company that you're getting pre-qualified by that is doing that to you, you need to go get a second opinion, or you need to take your business elsewhere, because they are not doing what's in your best interest. They're doing what's in their best interest, and they're unfortunately just not being able to be competitive in this market. So they're just charging you extra money so they can be competitive. All right, guys. So hopefully this gave you guys some insight into what's going on in the industry as far as mortgages, and obviously give you a little bit of education as far as what you should look for as far as paying points for rates, and what you should be doing if you do see your mortgage company or your lender that is charging you discount points without you even asking. If you guys have any questions, I'm not licensed in all 50 states, but I'm always here to answer questions. Please reach out to me. My number is 480-773-2686, or you can shoot me an email, nick@valormortgageaz.com, and more than happy to answer your questions about mortgage financing. Until next week, you guys have a good one. Thanks.